So I want to give a huge kudos here to Palantir's marketing team because they finally get it. They finally understand what's required to please Wall Street and in turn get that stock to rally. In their latest earnings report, they released some pretty good numbers. Not all of it was great. We'll talk more about that later in the video. Let's kind of focus on the positive first here. But it was enough to kind of reignite the stock, bring optimism back into the company and the stock, and of course get Wall Street behind it. You can clearly see from the rally that we're seeing in Palantir the last couple of days. So up until this earnings report, investors have really punished Palantir for two main things. The first is that they're just not a profitable company. They keep burning cash, and although they may have a good cash balance, that's not really sustainable super long term, right? So not a great position to be in. The second thing that they've been criticized heavily for, and probably is one of the poster childs for, is stock-based compensation. Now, tons of tech companies already do this, but Palantir, their stock-based compensation, in my opinion, was out of control. I think Wall Street probably felt the same way, and it was eating into potential profits that the company could make. So that was something that was always, monitored under close attention, and investors were kind of waiting for Palantir to finally say, hey, this is something that we're really going to focus on reducing. The reason stock-based compensation is such a key topic for investors is because the more stock that they issue, the more diluted shareholders like you and me become. So, if you own like 1% of the stock and they issue more shares, that percent shrinks and now you own less of the company. So obviously not a great position to be in as an investor. Well, the good news is in this earnings report that was just released this week from Palantir, they addressed not one, but both of these concerns. And when I took the screenshot here, it was right after they reported. Stock was up massively after hours, hitting over 20% at one point. And as we know from the last couple of days, it's continued its strong rally. Okay, so what happened? What's the scoop here? Let's kind of talk about it a bit more. Oh, but real quick, guys, I just want to say, if you are a Palantir investor, you definitely want to check out the compounder.co. Leave a description down below. Essentially what we do is every week we summarize news on selective stocks. Palantir is one of those stocks. If you want to stay up to date every single week, save yourself hours of time of researching and get all this information to digest in like 3 to 5 minutes, definitely consider subscribing. It's absolutely free. So, okay, getting back to this, let's talk about the first bombshell that they dropped. Profitability. Palantir reported their first ever quarter of positive GAAP net income. And it was only 1 cent here of EPS, but it is still positive. In their first sentence on the press release, they made sure investors don't miss this fact. They stated that they are in fact officially now a profitable company, despite investors thinking this could never happen. Now they managed to go from losing 8 cents per share to gaining 1 cent per share in a year, which is quite a remarkable achievement if you compare kind of year over year performance. And this is, I think, what took Wall Street and pretty much everyone by surprise. But now that they've delivered this, we know exactly what Wall Street is watching for with this stock in 2023. They want to see profits, they want to see growth, and so far Palantir is delivering. Although the growth part of it, it's a little bit questionable. We'll talk again more about that soon in this video. Let's kind of talk first about the numbers here, and then we'll kind of get into more, where some red flags could potentially be in the future. So the growth's been good. Nothing remarkable, but good. The US makes a majority of their revenue. Government grew 22%, commercial grew 67%. They expect commercial to be well above 40% for the remainder of 2023. All segments combined, revenue is up 24% year over year, which is below the 30% that management kept shouting from the rooftops in 2021. But the stock, as a result, has been punished over the last year. So, it's kind of been priced in that they aren't going to hit that 30%. And it looks like, at least from the performance of the stock now, that 24% was better than what Wall Street was expecting. Now, I spent some time listening to the conference call, and on the call, Karp, the CEO, he did kind of focus on why the company decided to turn profitable here, and they kind of made that a priority. The first is, of course, because investors have been waiting for this. They've been listening to investors. Investors have been like, are you ever going to be a profitable company? So they first wanted to address that. But I think more importantly was some of their customers actually had some concerns around the longevity of Palantir, especially kind of during this economic slowdown that we're seeing. They were wondering, hey, is Palantir actually going to be around in like the next 3 to 5 years or so? Or is this company just going to keep burning cash and, all the investments that we make are going to be burnt as well. So Palantir really wanted to focus on that and give their customers really peace of mind here and say, hey, look, we are profitable. We're going to be around for the long haul. Keep investing in our products because clearly we can prove that it helps your business operate and we're not going anywhere. And to kind of reaffirm this, not only did they mention the word profitable multiple times on their call, but Alex Karp also did say for 2023, they will be a profitable company. So big expectations here. Obviously, it's something that investors are kind of giving the benefit of the doubt here. They missed on kind of their 30% revenue growth that they promised before. But that's in the past. Maybe this year they're being more realistic with their goals and they believe profitability is what's going to happen this year. So we can all collectively breathe a huge sigh of relief here. Palantir is now, whether you like it or not, officially a profitable company. Now, in terms of their balance sheet, they have $2.6 billion in cash. They have no debt, nearly $1 billion of credit that they can pull at any point. So, fundamentally here, they're in a very strong position. Now, the second thing that we need to talk about is stock-based compensation. Like we said, it's a huge topic around tech stocks. Palantir was a massive company that people were focused on with stock-based compensation and kind of what not to do with stock-based compensation. And investors honestly believe that this company just couldn't get it under control. And as a result, they would just never be one of those cash cow companies because of it. The good news though is that SBC, stock-based compensation, has been trending down quarter over quarter and year over year. You can see from Q4 2021 to Q4 2022, so over the span of 1 year, it was down $37.5 million. And for fiscal year 2021 versus 2022, it's down $213 million. So obviously these are significant savings. It's helping Palantir become that profitable company that they plan to be in 2023. And it's honestly really good to see from an investment perspective. We're not going to get as diluted as we did in previous years. You'll notice a lot of tech companies release their earnings, especially growth companies, with adjusted EPS or adjusted free cash flow or adjusted whatever. And that's essentially, they're taking out things like stock-based compensation to show that, hey, we are profitable if we didn't do stock-based compensation or if we didn't do XYZ. Honestly, the reality is they are doing that, so we shouldn't look at the adjusted numbers for these things, even though, that's typically what's reported out there. And it's good to see that, even with the unadjusted numbers, the actual GAAP, general accounting principle numbers, Palantir is profitable. But now, guys, okay, let's kind of shift gears a bit. That's the positive. The stock's doing well. Optimism's here. 2023 looks like a good year for the stock. But let's focus on a few things that I felt if you're an investor in Palantir, you need to pay attention to. They aren't massive concerns today, but they could become bigger issues in the future. So the first thing is revenue growth is slowing down quite significantly. I think it's worth noting. So in 2023, Palantir expects revenue in the range of 2.18 to 2.23 billion, which is great. But when you put that into context, year over year from 2022, this is only around a 17% growth rate, and on the higher end too. And this is a far cry, again, from management's initial 30% CAGR over the next few years. And if you look at kind of like a bigger picture, the trend is clearly down. Like the company's gone from over 30% growth to the 20% growth range to now in the teens growth range. What comes next, right? Like the economy is slowing down. They acknowledged on the call that 2023 is going to be a tough year economically, so business could slow down. And maybe we get into single-digit growth, which will not be a good thing if that's what they project for 2024. But again, that's looking like another full year out. A lot can change. The economy could recover later this year. So as of right now, Wall Street seems to be happy with the 17% growth. They seem to be accepting of that. Maybe they feel that Palantir is kind of sandbagging this and they actually hit 20% plus again. But we'll kind of wait and see. I think that'll be another huge metric to watch for next quarter's earnings. Now, the other thing which we need to talk about here, and I'm sure if you watch other Palantir videos or follow Palantir articles, it's come up that, technically they're profitable in this past quarter, but there are a few things that help them get there, and from an operating perspective, they're still burning cash. Now, we can see in Q4, they had pretty much an $18 million loss from their operating expenses, but this is trending down quarter over quarter and year over year, and it looks like Wall Street is kind of pricing this to actually turn positive in 2023, which would support management's guidance of profitability here for 2023. So while they may have had kind of like a one-time benefit here from like investments and other income, which helped them get to that, plus 0.01% EPS, it looks like for the rest of this year, putting that aside, assuming that's kind of negligible, the business itself looks to be a profitably run company. So of course that'll be a huge positive because they don't have to rely on external investments or factors to make sure that investors see that this is a profitable company. So that's kind of like, where my mind's at. I hold shares in Palantir. I think it's, a good company. What they're doing is pretty incredible, and they do have a pretty strong moat around the business. So no concerns in terms of like the fundamentals right now for me. But these are things I'm going to be watching for the next few quarters, and we'll see if things trend in the negative direction here. Right now, we are seeing kind of a downtrend, but the way that things are looking, it looks like this may be the bottom and things may actually bounce back. We'll see. The other thing I really wanted to note, which is kind of outside of the fundamentals of the stock, is that their conference call, A+. Like the video quality on there, the audio quality on there, like the different camera angles that they had, like very cinematic, like seamless YouTube link to stream and watch. Honestly, other companies can take note here. This is what a conference call experience should be like. And I know this doesn't really affect the stock or the fundamentals or anything like that in any way. But honestly, from a investor perspective, it was a very enjoyable experience listening to this conference call. So anyways, guys, those are my thoughts on Palantir's earnings. Let me know if you agree or disagree in the comments down below. I think it's going to be a very interesting year. So far, it's been a stellar year for Palantir. We may see the stock get back into like the mid to high teens at some point this year, which I'm sure a lot of investors are kind of waiting for. But that'll only happen if they continue to execute, they deliver on their promises that they set in this last call, and of course, if the economy kind of helps a little bit here with some sort of recovery. Anyways, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.